Hi everyone, and welcome to Tuesday, where we take a look at the performance of the NZSX 50 over the last week. Just remember the little bit of housekeeping that this is for educational purposes only. It's certainly not intended to be personalised financial advice. If you're looking for that, you do need to go and talk to your own personal financial advisor. So let's share my screen. And here we have up on the board the NZSX 50 on a weekly basis. I'll just sort of zoom in there. This is Tuesday that I'm recording this, so the market is already open, and you can see that there with where my cursor is. So the market has opened for this week, which is a really good sign. The market here, as you can see, we've got a little green candle. So it did close up for the week last week, which is great. It's a good positive sign, but it just, to me at this stage, looks like we're in a little bit of a trading range at the moment. We've had a little bit of a rise in the markets, basically from sort of June last year. We had a bit of a rise, and now we're just sort of seeing it just going through a little bit of a flattening stage, which can be quite normal. We just need to obviously keep an eye on these markets and just sort of see what's happening. Let's have a look on a weekly basis as well and just see what's happening there. I'll just zoom in a little bit. And it's almost, you've got a pattern forming. You've sort of got a little bit of an up round, then we've gone down again. So we've sort of got a little bit of a zigzag formation happening. But you can still see that, yes, the market has closed or is up for the first trading day of this week as well, which is a really good sign. Let's put the moving averages over it just to see how that is happening as well. Right, so here's the 30 period exponential moving average, and on a daily chart the market is trading just a little bit below it, but it's sort of not, you're not seeing much variation away from it. So yeah, that is something to keep an eye on. To me, I would want the market to be trading above that 30 period, so 30 days moving average. You can see on a weekly basis here, when I move out to the 5-year chart, it is trading pretty much at the 30 period moving average, which is a good sign. It's what we want. Every now and again you'll see the market diverge away, and you can see that through this period here from about August last year. It had a run away, then the moving average is caught up again, and that is quite common. Let's also put on a slower moving average, and I'm going to use the 15 and just change that. So there we go. You can sort of see that the market has dropped below a little bit on the weekly chart, below that 13-week moving average. Again, nothing to be too concerned about. The other thing that I look at as well is to see how much volatility there is in the market. So I just take the ATR, the average true range or trading range, and that is currently at 223.78, and just divide that by where the market is currently. So 12,913.09 times it by 100. So we're looking at about 1.7% volatility. So again, that's great for me. I want to make sure that the market is under that 5% volatility. So where to from here? I honestly don't know. Nobody does. But it is, hey, the market has had a fairly strong run up to where we are now. What is going to happen going forward? Nobody knows, but there could still be further to run in the market. We're certainly seeing some really good, strong signs coming out of the US market still, and even Australia. So hopefully the New Zealand market will follow suit on those. So yeah, just keep an eye on it. Like I say, I'm certainly quite happy at the moment. Things are above those moving averages. We've got low volatility, and we closed up for the week last week, and this week has started off positive as well. So I hope that's helped. And remember, if you've got any shares or anything that you'd like me to review, let me know in the comments. I'm happy to do it. And come back on Thursday and we'll take a look at another share. Haven't decided which one yet, but we'll do that. Okay, take care.